Hello, hello, hello. Welcome to today's property channel, guys. So today is the 5th of May 2020, and this is the Katana property channel episode number 5. Today we're going to be covering due diligence, and essentially the thing that we're going to be covering is the 5 things that you need to make sure you do before you buy any property. So basically the 5 things that can kill a deal if not done correctly. So it should be a very, very exciting session. Just sort of check in with you guys. Want to make sure everyone can hear me okay and you can see me okay. So if you guys can do me a favor, just pop a quick comment in the chat box or in the message box. Okay, John, so we've got you on YouTube. Awesome. Good to see you, John. Very cool, man. Anybody on Facebook? Just want to check in on the Facebook Live, see if anybody's picking up the stream there, because I know last week we had a couple of issues trying to get onto YouTube, and now we seem to have the YouTube sorted. But just want to check in on Facebook. Unfortunately, Facebook is a very long delay for us to be able to receive the information. But yeah, I suppose it's going to be coming through in a minute. So it's super cool to have you guys on. Thank you very much for taking the time again, as per always. I really appreciate you guys actually turning up, tuning in. What I'd love you guys to do throughout, obviously, if you can share, just hit the like, hit the heart. And if you can, hit the bell. If there's a bell available for you, depending on what stream you're watching, just as a way of being able to get this out there to other people. It'd be super cool. The more people we can get onto this, the better. The more people we get learning about property, learning about financial intellect, financial intelligence, and being able to become financially free, the better. So please, guys, if you can, just like and share this as much as possible. Leave as many comments as possible as we go. Awesome to have you on, Kathy. Also, Leslie, thank you very much for tuning in, guys. Very cool to have you guys on board as well. Okay, so like I say, today we're going to be covering the 5 things that could kill a deal immediately. And this is due diligence. The whole session today is all around due diligence. It should be a very exciting session, actually. I'm very much looking forward to it. For me, looking down here, please understand, I'm looking at my computer screen, watching your comments coming through, and this is where I sort of check it coming in. I'd love you guys if you could just sort of keep the dialogue going, keep the conversation going. It makes it much more enjoyable, much more engaging for me, and I'm sure makes it much more fun for you because you get to ask the real life questions that you would like the answers to. Okay, so just checking in. Where are you all tuning in from here? Obviously, we've got people from all over the place. We've got a few people on YouTube. We've got a lot more on Facebook. We tend to get, a few hundred views for every video at the minute. And obviously, considering this is the 5th video, it's getting there. It's getting there. So I'm very happy. So just pop into the chat box where you're tuning in from, and make sure you just give us the thumbs up or the likes as we go. Cool. So in terms of the 5 things that we're going to be covering, so the first one is property valuation. So that is the first thing that, if you do not do it correctly, can knock a deal dead. Okay, that'll wipe out your due diligence immediately. Okay, so that's property valuation. So that's knowing what the property will be worth at the end. So once you've done the refurbishment, what will the property be worth? Okay, so that's number 1. Number 2 is your rental valuation. Okay, so how much will the property rent out for? Now, obviously, this is only applicable if you're doing buy-to-lets. So if you're looking to buy a property and you're looking to rent it out, you need to make sure you have that figure as part of your due diligence, because if you do not have that figure, it is going to cost you a bundle of money, okay, and potentially lose you a bundle of money. You are then gambling or rolling the dice on the property market. Number 3, so the third item that will knock a deal dead when it comes to due diligence is you need to be doing demand checks. So you need to check the demand in the market and make sure that whatever strategy it is that you're looking for is covered off. Okay, so that's your demand. Number 4 is your refurbishment quote. You need to make sure you have an accurate refurbishment quote. Just so you guys know the general mode, the general model of how we operate. Hey, Katie, awesome to have you on the call. Thank you very much for joining in. I hope you enjoy. I hope you get some value. As always, please make sure you drop in the likes, anything you enjoy, and please just keep the comments going. Ask any questions you want. More than happy to answer anything. So the general routine, as we tend to like to do on the channel, is we'll go through the basis of what it is we're going to be covering throughout the session. Then we go in depth. Okay, we break it all the way down as much as we can in the time allotted. And then I'm going to give you guys some exercises to go away with so that you can get the most value. And providing you actually do those exercises, it will teach you how to do something more within property that you may not have known before, and therefore enable you to get a better handle on building your portfolio and getting financially free. Okay. Hey, Clive, awesome to have you in. Thank you very much for tuning in. Very cool for you to be on. Disley, Cheshire. Okay, awesome. Thanks, John. So in from Cheshire. So we got people from Cheshire and a few other people judging by the other chat as well, which is very, very cool. So So that is your refurbishment quote. You need to make sure you have an accurate refurbishment quote. And the final thing you need to do is you need to have accurate deal analysis. Okay, now what do I mean by deal analysis? So deal analysis is basically where you have a list of all of the information. So all of the costs, income, expenses, everything you need. And you're going to be taking a look at what it's going to cost you totally to get into the deal, including the waiting time for refurbs and all that stuff. And then what you're going to get back from the bank or the refinance lender, and see how much money you're expecting to have invested in the deal at the end. Okay, now I'm going to go through this a little bit more in depth as we go as well. The term is return on investment. So that's the term. Maureen and Andy, awesome to have you guys on the session as well. Thank you very much for joining in. As always, please make sure you drop a like, drop a heart, do whatever you need to do. Let's keep this feed going. Let's get this out to as many people as possible. Okay, so very, very cool. Right, so let's dig into the first one. So the first one is local property valuations. Can somebody tell me, what is a property valuation? What do you think I mean by property valuation? And I'm keen for you guys just to pop it in the chat. I like to have a good, engaging dialogue and conversation. And the one benefit of doing this is live, as opposed to me just blurting out a recording to you guys, which I can promise you would be easier for me, but it wouldn't be easier for you guys, is that we can have a good conversation. Ashu Sharma from Geneva. Hey, Ashu, awesome to see you, buddy. It's been a long time since we last spoke. So I believe last time I saw you was possibly in Geneva, where we went to a kebab place. So very, very cool to see you, man. It's a long time no speak. So thank you very much for tuning in. I hope you get some value. I hope you enjoy what we're covering today. Yes, so, okay, so what has already sold at the price in the area? Okay, perfect, Katie, exactly right. So your expected value or your property valuation is looking at what has already sold in the area. Now, this is very important because a lot of people, especially estate agents, is there any estate agents in, by the way, just want to check in. I have, me and estate agents don't always get along, although we have to as part of what we do. We're quite symbiotic in what we have to do. But unfortunately, I don't always find all estate agents, let me be clear, because some estate agents are different. I don't find all estate agents are typically completely honest. Let me subtly say that across the way. So a lot of people, when they list a house to sell, okay, the property will be listed for a sale price that is not necessarily relevant to how much the property is worth. And this is called buying business. So an estate agent, they will offer to sell your house, and you say, okay, great. So how much could you sell it for? And they will know, okay, so maybe the house can sell for 150,000. They'll say, we can sell it for 170,000, tying you into a 3-month contract, and then over those 3 months, chipping you down and selling it for 150,000 in the end. Whereas more honest and ethical estate agents will come in and say, we can probably get 150. We'll start at 155 in the hope for getting 150. Okay. The problem is a lot of people then go with the higher one because they think, oh, they're going to get me more, but they won't. They're pitching to the same audience, doing the same stuff. So they're unlikely to typically get you a much higher sales price. Maybe a little bit, but typically not much. And if anything, it typically actually keeps you on the market for a lot longer. So when it comes to you valuing a property, there's 3 different things you need to look at. Okay, 3, that's it, 3. So the first one is you need to look at local comparables. Okay, local comparables. So what has sold in that area, okay, and that's the important word, is sold, not what is for sale, but what is sold in the area that is of a very similar type and size of that type of property, okay, in good condition. And what is it sold for? And typically within the last couple of years, because you don't want anything that sold like 15 years ago, it's not going to give you an accurate finger on the market. So once you have an idea of what is sold, this is called a sold comparable. And then this, you want to get an array of these ideally, and this will give you start to form a bit of a picture. Okay, now please understand, I talk a lot about pictures and puzzles, and what we're doing here, okay, is you're gathering information, okay, from multiple sources, and then you're basically putting all those bits of information together like a puzzle. And the more pieces you put together in a puzzle, the more of the puzzle you see, the more of a clear picture of the puzzle you see. Okay, so I urge you guys, make sure you gather the information ahead of you doing this stuff, and that's what we're covering here. Okay, so you get your sold comparables. So that's the first thing, you get your sold comparables. Okay, then the second thing you want to be doing is you want to get your local knowledge. Okay, so local knowledge, and this is all just for property valuation. And I'm going through the due diligence steps. This is what we always go through. Any deal we have agreed, this is the steps we go through to make sure that the figures are accurate and everything is right. Okay, so the second thing is you get your local knowledge, okay, local information. And the way you get this is you reach out to 3 local estate agents, completely unrelated, So they're not the ones selling the house. They've got no bid in you selling or buying the house, and essentially they're completely independent from the sale. Just give them a call and say, hey, look, I'm looking to sell a house in this area, or I'm looking to buy a house, or I'm looking, like, however you want to present this, and just say, I want to get a bit of an eye line as to what you guys think the property would be worth. Okay, and they will give you a bit of an idea. Not all estate agents, some estate agents, oh, there's no valuer here, stuff like that. But the idea is you want to be asking, can you guys give me a bit of an idea? What do you think the property will be worth? Okay. Once you get 2 or 3 different estate agents' information, okay, with this, obviously list who they are, because it's useful to understand for future when you go back, who is willing to give you the information, who is not. Because if you're investing heavily in that area, you're going to want to know who you can rely on to give a call and be like, hey, look, I'm buying another one. Just your thoughts. I'd love it. Then go drop them in a cup of coffee or, some biscuits or something in the future to say thanks if necessary. Okay, so that's the second thing, is you want to be gathering information through local knowledge. Okay, now the third thing is through automated search results. Okay, now this is where it starts to get a little bit sexy, a little bit more interesting. So have any of you ever heard of HomeTrack with a T, HomeTrack, HomeTrack? Anybody heard of HomeTrack out of interest? I know, so we got a few of you mentorship students on the session today, and I know you guys would have heard of HomeTrack because it's something that we talk about quite regularly. But any of you guys ever heard of HomeTrack? It's fascinating because you have this really long delay between people typing and then the actual response coming through. So I ask a question and I wait and wait and wait, and eventually it comes through. Okay, yes, okay, brilliant. So some of you guys have heard of HomeTrack. Now, HomeTrack is an automated valuation tool. So currently they're deemed as the UK's leading automatic property valuation tool. As a matter of fact, it's used by, I think it's 20 of the top 25 mortgage lenders. They're used by RIC surveyors. Like it's a good tool. Okay, it's not an amazing tool, but it's a good tool. Interestingly enough, we're literally right now developing our own valuation tool that will be significantly more accurate and give a lot more data, but that's a completely different conversation, which I'm sure we'll catch up on at some point. So HomeTrack will give you an automated valuation. Okay, so this will again, and it will again give you a look. The property's worth X, or this is the range, and it will also give you a confidence rating. Okay, now with these 3 bits of information, what you're going to do is you're then going to pull it all together, and you're going to put together your jigsaw piece. And this will then give you an idea of, actually, so the automated valuation is way out. As an example, then you go, okay, so let's disregard that. Or my comparables was way out compared to the other 2. And then you get to start to put together the jigsaw piece and go, okay, great. So now I have a pretty good idea of what the property is going to be worth. That's number 1. Now, if you buy a property and the value comes in at less, okay, because you didn't actually do your due diligence, what is that potentially going to cost you? Okay, and it's more than one thing. Okay, so what is that potentially going to cost you if you overestimate the value of the property? So if you buy a property, you think it's worth a lot more, you buy it, you refurbish it, and you try and refinance it. Okay, what is that going to cost you? And it's a very interesting point here, and I love asking it. Okay, and the answer is obviously it's going to cost you money. Okay, first and foremost, because on refinance you're going to get less in. You've obviously paid more than you should have paid because you thought it was going to be worth more. Okay, so those are the big things. But the other things to consider is if you've got more money invested in one project, that's less money you can invest in future projects, which means it also sacrifices your income from those future projects and also potentially sacrifices time. Okay, and what I mean by that is the whole premise, the whole reason you're building a portfolio is for cash flow. Is that a fair statement? The very first focus of any property investor should be cash flow. Okay, so I'm presuming the primary reason you're investing is to build up your cash flow pot. And if you have essentially sacrificed some money into a deal, that means that's less deal you can buy, which means less money you can get. Okay, it's monthly income, so cash flow, net income. Okay, which basically at the end of the day means that it will take more properties or more deals for you to then achieve your financial freedom, give up your job, spend the time with your family, do all the stuff you love. Okay, hopefully this is making sense to you guys. Is this it? Let me just sense check where we're at quickly, because we've just done the valuation one, and I've gone through it at quite a pace because I'm conscious we've only got another half an hour before I need to get into the Q&A. Okay, so does this make sense to you guys? Please drop me a chat yes in the chat box, or a comment in the chat box, or a like or something, just so I know that this makes sense to you guys, and then I'm not losing you as such. So I'll give you guys a second to get some responses in. Right, okay, now we move on to number 2. So the second thing that will drop a deal dead in the water. Okay, the second item that will drop a deal dead in the water if you do not get it correct. Okay, so number 2 is very simply rental valuations. Okay, rental valuations. Why is it important to accurately know how much a property will rent for? Okay, let me ask this question. Okay, why is it important to accurately know what a property will rent for? And I'm curious to see what your responses will be on here. So please make sure you pop it into the chat box and just keep your responses coming, because it keeps the dialogue, keeps the engagement going, and makes this much more enjoyable for all involved. So why do you think it's important to accurately know the rental figure of a property before you buy it? Okay, if you're buying it to rent, not if you're buying it to sell. Okay, I just want to check in, see what the responses are. Okay, to work out the rental yield. Okay, so really good response there. Ashu, thank you very much. To work out the rental yield. So I would use the term return, but yeah, essentially it's a very similar thing, as to work out whether this deal makes sense on a rental basis for you. So let's just say, for an example, you buy a house and you think, okay, I'm going to be getting £600 a month rent. And then after you buy it, it turns out you only get £400 a month rent. Okay, what will that do to your cash flow on a monthly basis? What impact is that going to have on your cash flow on a monthly basis? Okay, and obviously it's pretty devastating, because you've knocked, 33% off, which is huge. Okay, so it's important to make sure you have a good understanding and a good grounding as to what the rental income is going to be on the property. So just to work you guys through the steps quickly. So bear with me one second, just so this all makes sense. Okay, so we first off start with, okay, so this is all due diligence. Okay, so in order, the first thing is you get your deal agreed. Okay, this is it. This is where you start. Obviously, you get your deal agreed, because until your deal's agreed, none of this makes any sense to be able to do. Just want to check, can you guys all see the whiteboard okay? Or would you like me to use a different color? Just want to check in before I do the whole thing here and then start getting messages. I can't see it. I can't see it. Okay, can you guys all see this okay? Just give me a yes. Just want to make sure. Okay. Yep. Okay, cool. Good. Right. So the problem with Facebook is when you get to the bottom, okay, it doesn't actually scroll down, so I've missed loads of comments from you guys. So thank you very much for keeping the comments going. Unfortunately, I've missed a few of them. Will affect the cash flow. Okay, brilliant. Awesome. Genuinely, thank you for the comments, guys. Awesome to have you on, Adam, as well, and Benjamin Knight. Awesome. Thank you very much for tuning in, guys. Very cool to have you guys on. Hope you enjoyed the stream. Please make sure you leave a comment and a like. Let's get this shared out to as many people as possible to help more people achieve financial freedom. This is the gig. Okay, so due diligence. Okay, first thing is, once you get the deal agreed, at this point, okay, now we're going to start running our due diligence. So in terms of where we're at here, of course, then we get the property valuation. Okay, that is number 1. Okay, that is our very first thing we're going to do after we get our deal agreed, is to get the property valuation exactly as we've just gone through. Okay, then the next one, which is number 3 on the list, obviously number 2 after getting the deal agreed, okay, is you're getting your rental valuation. Now, interestingly enough, it's going to be a very similar process to getting your property valuation. It's a very, very similar process as to what you're doing. Okay, hey, Conrad, awesome to have you on the stream, man. Very cool to have you on. Thank you very much for joining. Very cool to have you, dude. Yes, so rental valuation is done in a very, very similar way. Okay, so the very first thing you're going to do is you're going to go online. Now, when I say go online, guys, what I mean is pop onto Rightmove. So I'm presuming you've all heard of Rightmove in the UK. There will be many property portals all across the world, depending on what country you're in. In Geneva, in Switzerland, I have no idea what the property portal is. But I'm sure, if I remember correctly, you're investing in the UK. So you'd be looking at rightmove.co.uk. And that's where all the UK properties are listed, if you don't know, which I imagine you probably do. Okay. So on Rightmove, what you're going to do is you're going to go and find the property. Okay, go and find the property. Let me just get rid of that. Where it is. So you pop in the postcode. Okay, and you go and take a look for rental properties within that area. Include let's agreed, same number of bedrooms within a quarter of a mile. And then you look and you go, okay, so here's all the 3-bed terrace. They're all around 475. And you, okay, great. So that tells me that I'm probably going to receive somewhere around 450 to 500 or somewhere around 475 for rental. Okay, so that's the first thing. So that is your local comparables. Now you can look at what's on the market as well as what's let agreed when it comes to rental, because there's not typically much variance. Lettings agents pretty much hit it on the nail. And I mean, the difference between 450 and 500 a month is next to nothing when it comes to that level. Okay, but that then gives you an idea in terms of local comparables. Okay, local comparables, which is your first thing. So let me actually pop these up on the side here, because it looks like we've got quite a bit more board than usual. Okay, so so the method, okay, is number one, local comps. So comps is comparables. Okay, number two is local knowledge. Okay, and then number three is automated values. Okay, cool. So, okay, just want to make sure everything's through. Yeah, so for rental values, you're going to follow exactly the same sequence. So you get your local comparables, and then you also get your local knowledge. So this is where you're going to be speaking to some of the local lettings agents, and you're going to say, hey, look, I've got a property in, you know, this street of Runcorn. I'm looking to rent it out. It's a 3-bed semi. We're just doing some refurbishment. What do you think it would rent out for typically? Okay, and what I say is always be conscious of how you present the information. So how I'm saying that I talk to the estate agents or letting agents or anything, make a mental note, because that is the kind of things that you're going to want to be saying. Just word for word if you want to, because it works. It's the stuff I've been doing. We built out and bought and sold millions in property over the past 4 or 5 years, created several 5, 6, and 7-figure businesses and all good stuff like that. And it all is based on the negotiation techniques and the conversational techniques that I teach you guys throughout this. So make a mental note, or at least make a written note on some of it, as to how you're going to present this stuff. So yeah, so for a letting agent, you're going to say something along the lines of, hey, look, I'm just refurbishing a house down the road on XYZ street, and I'm looking to get an idea of how much it would typically rent out for. I'm not looking for top range. I'm not looking for bottom range. Just typically, what can I expect in the bank that you know you can rent it out normally all day long for? And they will give you an idea. Okay. Now, this is your second point of information. So obviously you have your first, which is the local comps, and then your second is your local knowledge. Okay. And then you move into number 3. Now, again, this is down to your automated items. Now, the benefit of HomeTrack is it also gives you, as well as your expected end value of the property, also gives you an expected rental figure. Fairly accurate, I'd say. Fairly accurate, not amazing. So HomeTrack's typically around 80, 85% accurate, which compared to everything else in the market, it's very good. What we're building, we're hoping for somewhere around 95, which is significantly more, but again, a whole conversation around that. Okay, so now you've got your automated valuations. So what you're going to do at this point is you say, okay, great. So here's my jigsaw piece on the rental. So I've got this information from my own estimates. I've got this information from 3 different lettings agents, and I've got this information from the automated. Let's take a look at that, and then let's decide on what we think is fairly average for that figure. Okay, nothing crazy, nothing outlandish, and then that will give you a good idea. Okay, that's your second item on due diligence. Okay, that's only the second item. We've still got another 3 more to go. Okay, now we're going to start to move a little bit more into demand. Okay, now demand is slightly different. Demand is a little bit of a different beast. Okay, of a different beast. Okay, so if you consider, okay, and this is a useful question, if you consider we currently live on an island, are they currently making enough houses to keep up with the stock? Okay, anybody know the answer to this? Are they making enough houses to keep up with the stock of people that need housing? Okay, it's a useful question because I want to see how you guys respond. Okay. Okay, no, exactly right. So no, they're not. They're not making enough houses to be able to keep up with the demand. So last time I checked, now I haven't checked very recently, but last time I checked, the most houses they'd ever built in 1 year was around 180,000 houses in 1 year. Okay, the current requirements is 280,000 a year. Okay, this is the last time I checked, which basically means they are making 100,000 houses a year less than they need to be making for the ever-growing population of the UK through migration as well as through population growth through childbirth. And it's really interesting because shortfall of about 200,000 per annum. Okay, brilliant. So Ashu, so you may have looked at more recent figures, and hey, I don't disagree, because it's very, very possible it's up at that point at the minute. And bear in mind, 180,000 was the most. They don't build that much a year. So what that tells me is, in the most part, there is an ever increasing demand for properties in the UK. Okay, that's the first thing. Second thing is, I'm an engineer. I like to use logic. I love to use logic. And if I break this down into a logical sense of the whole thing, I mean, just consider for a second, you've got people all across the UK, and I mean literally all across the UK, living in houses. And if you're looking to buy a rental property in an area, if you notice that all of the houses are full, or most of the houses are full, and there's not 1,000 for sale signs or for let signs down the street, what do you think that tells you about the property demand? Okay, the property demand. Now, this is very interesting. Okay, and I actually had a question come through from the last session, the last recording from Kim. So Kim, I hope you catch us on a recording. I know Kim's based in Singapore, so she unfortunately can't be on top of this. But yes, so basically the demand is high. If you're in an area where all of the properties are rented out, the demand by definition has to be high. Okay, now typically where we like to invest is areas where you have a high demand for rental, but a low demand for purchase. Okay, and the reason is because you're going to have an area where people typically can't afford to buy a house, so they'll tend to be more renters. So you'll have like a turn on the axis. Now, the benefit of this is, if there's a high demand of rent, okay, but a low demand of purchase, that means the value of the property will stay low because of low same supply but low demand. But the rent will continue to increase because there is a high demand for rent, but the supply again stays the same or very similar. So these are typically the areas we want to be in, where you continually have this increase in rent against the value of property. Okay, which means the areas that we're typically looking in, okay, the term is outside of Beirut. One of my property coaches once told me that. I thought it was wonderful. Okay, outside of Beirut. You don't want to be in Beirut where you feel like you're going to be stabbed or have your boiler stolen. You want to be just outside, where people aspire to live a better life and want to live a more comfortable life. Now, I in my life have lived in many of these places, and it's okay. It's just part of life. And fortunately now, buying houses, etc., it's slightly different. But what this then tells you about the area is that it is predominantly a strong rental area. So if the houses are full, primarily most of those houses will probably be rented as opposed to owned, which then tells you something about the demand. Okay, so that's the first thing about the demand check, is just take a look down the street, whether that's on Google Street View, whether that's you viewing, or whether that's you using one of our viewers from our viewing service that our mentorship students get access to. Okay, it's completely down to you. Now, for those of you living in the South or living offshore that you'd like to build a portfolio in the UK, do not worry, you do not have to come here. You do not have to view houses. We actually have a team that takes care of the whole thing for you. So this is literally for internationals and UK residents and Southerners, Northerners, whatever alike. We can help you build a portfolio no matter where you are in the world. And we actually go through in depth exactly how we can do that for you on our 3-day training, which I'll be covering in a little while. Basically, it's running this weekend, Friday, Saturday, Sunday. I urge you to come along. It's the only time we're going to run it for free. So I hope you really enjoy it. But yeah, so we're running that for free. But essentially, that's your first check. Okay, you want to have you or somebody else check the street. Make sure that it is not just full of for let or for sale signs, because that tells you that it's a rough area and people typically move out. Okay, now let me be clear. Even if an area is rough, okay, if the street is full, it's because people still need a place to live and they're happy to live there. Okay, bear in mind, you're not building a house, you're not making a house into a condition you want to live in. You're not putting it into an area that you want to live in because you're not living in it. Okay, you just want to have a house in an area that other people are willing to live in and happy to live in, and you give them a house that is higher standard than what is in the area. Wow, that's a really interesting mouthful. Okay, and that doesn't mean like 5-star house in a 2-star area. It means 3-star house in a 2-star area. Okay, hopefully this makes sense for you guys. The term is fit for purpose on that, by the way. Okay, again, something we cover more in depth on the 3-day training. Okay, so that's your first phase of due diligence for demand. Now, your second check is you're going to be speaking to a few local letting agents When you speak to them here, you're also going to be piggybacking in this question, which is, look, how long do you think it would take to rent this property? Do you think it would take a while, or do you think it'd go fairly quick? Okay, and they will be able to give you an idea of, well, that area is a little bit rough, but it's okay. We have quite a few come through there, and we can rent them out all right. Okay, that's fine. If it's, I don't think we're going to be able to rent it out, and you get that as a reoccurring theme from many letting agents. Okay, either you're picking all the prime letting agents by sheer misfortune or by purpose, or it is an area that is inherently very difficult to rent out. Okay, so that's very important. So you need to make sure of that. Okay, so demand, it's a very, very big one. Now, that's basically it. Once you check in with the local letting agents, you want to check 3 different local letting agents, as well as just a bit of a sense check in terms of how the area is looking, if it is full, etc. Then you move on to number 4. Okay, number 4. Now, number 4 is your refurbishment quote. Okay, now this is the 4th thing that can basically blow a deal completely out of the water. So out of interest, who in the session has already started to build a portfolio, has already bought some investment properties prior to today? Let me just check in, because there's going to be a few of you. So how many of you have actually bought some investment properties ahead of today's session and ahead of today's live stream? Just sort of want to check in. If that's you, just do me a favor, just give me a yes in the chat, just so I know. Unfortunately, it takes a little bit of a delay for the responses to come through, but I know there's a few of you that have. Okay. Okay, good. Now, interestingly enough, for those of you that have bought properties before, have any of you walked around the house, viewing the house and gone, I reckon it'll cost this much for refurbishment, and it turns out it costs something significantly different? Any of you ever had this experience? Okay, and this is an interesting question. I've had this experience, just so we're clear. Everything I teach you throughout what we're doing here, everything I teach on the 3-day training, and everything I teach in our mastermind and mentorship program, it's all based on my learnings. Taro, who's my business partner, the Japanese guy who unfortunately you can't see on the screen, all through our learnings as to what we've made mistakes with. Now, going through that experience and then essentially buying the house, and then the refurbishment cost goes from here, works its way all the way up, and all of a sudden you find that you've overspent on the house. So as an example, if the house is worth 100,000, you bought it for 80,000, you spent 30,000 refurbishment. This has happened. Okay, that experience is very, very annoying, because you spent more money than you needed to spend on the house, and you bought for more. So the way in which you negate or you stop this happening, okay, you insure yourself from this happening, is when you get the offer accepted. Obviously, you're going to have an estimate of the refurbishment yourself anyway, okay, because you will have had to view the house. You don't buy houses without viewing unless you have somebody trusted view it for you. Let me just be clear, okay? And if you have bought houses without viewing, then either you've come out very lucky and the roll of the dice worked out well, or it didn't, okay? But hopefully you've come out lucky. But what you tend to do is, after you've got your own base quote, you then book your builder in to go and essentially confirm it when you get the offer accepted. Only when you have the offer accepted, because do you think a builder will continue to want to go to property to property to property to quote on all of these if you haven't even got a deal agreed? Do you think they would be happy to do that? Ashu, great statement. So I use sourcing agents and allow 10% contingencies, and it generally came within costs. Okay, brilliant. So it depends on the sourcing agents. I'm sure many of you will have many stories about sourcing agents, because some of them are brilliant. I mean, we do sourcing, we do deal sourcing. Some of them not so much, and some of them are extremely unscrupulous. So just be a little bit conscious. Unfortunately, not all sourcing agents are made the same. Okay, so Clive, yes, a few times, always to the penny, Adam. Well, Adam, you're a builder, mate. And you do the work yourself, which makes it even easier to get it to the penny. But yes, I get you. So, so this is a very common thing that happens. So the whole sequence of what you're going to do is, when you get your offer accepted, obviously you run your base due diligence. Okay, run your base due diligence. Okay, once you've got your base due diligence and you're happy with all the information, you say, look, this aligns to where I'm at. Okay, then you get your refurb quote. Okay, but only at this time do you go and get your refurbishment quotes, because you don't want your builders going out all the time and quoting on properties you never buy, because at some point they're going to tell you, bugger off, I'm out, I don't want to do this anymore. Okay, so make sure you get your refurb quote after you've got your offer accepted. When you get that quote back, and a written quote, not just a random, hey, look, yeah, I reckon we can get it done for this. You want a written quote because you want something that you can hold them to. Again, I've made this mistake. It's important. I'm not talking about fixed price contracts or anything like that. Most builders will tend to try and stick to the quote that's laid out. Okay, most, not all. Okay, which means that typically you're right, but they seem to have a very short memory with what they've said. And not all builders, most. Okay, so useful information. So get your refurbishment quotes. Once you have your refurbishment quote and it's quoted out and it's got everything listed in there, at this point, now what you're going to do is you're going to run your deal analysis. Okay. Now on the 3-day training, we actually go through deal analysis in depth. I mean, it's too much of a long subject to go through with you in here. We've only got 10 more minutes and I've still got quite a bit more content to cover and Q&A as well. So your deal analysis. So at this point is basically you're going to be plugging in all of the details. So what are you buying for? What's your refurbishment cost? What's your stamp duty? What's your legal fees? What's your brokerage fees? What's your holding fees? So this is the fees between you purchasing it and then either renting it out or refinancing. So where it's costing you money for council tax and bills, gas, water, electric, etc. So what's your holding fees? What's your finance fees? So what's your setup fees? What's your basically all of your costs going in and then all of your refinance costs. And then you're going to be running that against what do you think you're going to get back from the bank upon refinance? And you'll have an understanding of how much money is going to be invested at this point. Okay, now, if you're not quite with me in terms of the buy, refurbish, refinance model, please go back to some of the other sessions. We actually cover that at length as well, where you buy a house at a low price, you refurbish it to increase the value, and then the bank will lend you 75% of the new value. Okay, and then you use that money to pay off some of the original money, and you'll have some money invested in the deal. Okay, so please feel free to pop on back to one of the other videos. We've got plenty of videos for you to consume across the board, but the property channel stuff is where we cover this at length. Okay, so then you run your deal analysis. Now, your deal analysis will at this point tell you if you've got the yield. Okay, now yield is a term, I don't like it. It's not a term that I like at all. I find it quite icky because it misses out a lot of the costs, a lot of the information. But yield is essentially your income against the value of the property or the investment. Okay, that's it. That's the yield. So your income per year against the value of the property gives you a yield percentage. And that could be in gross, that could be in net, where you take off some of the costs or all of the costs. It's a bit messy. I like to work on something called return on investment. Okay, and just so we're clear, if there's anything you don't understand that I'm saying, please just pop it into the chat box. I'm more than happy to go through some of this stuff. We go through it all at length in the 3-day training as well. I can't teach you everything you need to know within these little short snippets of time, but I hopefully give you guys a lot of value and a lot of information that helps you move forward. Okay, so we use something called return on investment, which looks at how much money you've got invested in the deal at the end of the day, okay, and then how much cash flow you've got on a monthly basis, and puts those against each other and tells you what percentage of your money you earn back every year through income. Okay, and that is the return on investment. Now, that is the figure I work on. And that is what analyzing the deal is going to do. And it's going to tell you whether your return on investment meets your minimum criteria. And if it does not meet your minimum criteria, i.e., that means you're buying the house for too much, okay, and any of these could knock that out, you either need to renegotiate or walk away. My suggestion, always renegotiate. Always. Unless you find major structural issues or anything like that, okay, always renegotiate. Now you've done this, you're moving into the purchasing process where you start getting legals, searches, structural surveys, all of that stuff done. When you get your structural survey done, again, take it back to your builder, say, look, are all of the items in the structural survey included within the quote? If it is not, if the quote goes up, reanalyze the deal if you need to renegotiate. Okay, you never want to buy a house for more than you need to buy a house for, because it's only going to cost you money, okay, income and time. And your most valuable asset in life, obviously your time. So let's not do that. Okay, so obviously in terms of the items that you need to be considering or concerned with today, let me just do this because this makes more sense. So the 5 things you want to make sure you cover off because they will knock a deal dead and blow a deal right out of the water are these 5 over here. Okay, so first and foremost is you want to make sure you know what the property is going to be worth upon refinance, or what it's going to be worth after you've refurbished it. what the rent's going to be after you've done all the works, okay, what you'll rent it out for, what the demand is going to be like in the area, what your refurbishment quote is, and that's a really big one, your refurbishment quote, okay, and then your deal analysis, okay, deal analysis. So you want to run the numbers and make sure the numbers match what you're looking to do and make sure that the numbers work. In terms of how you do number one and number two, you basically get local comparables, local knowledge, and automated valuations through a tool, something like HomeTrack. What you'll soon be able to find online is something called TrueVals, TrueVals.co.uk. That'll be up and launched probably within the next couple of months, which will be automated valuations, better than anything you've seen before, and it'll be amazing. Just in the meantime, obviously, if you guys are getting some value and you're enjoying this, please make sure you hit share, hit like, hit the bell, hit the thumbs up. Let's just keep this feed growing. Let's get as many people on as possible, and let's keep sharing the value and sharing the wealth of knowledge that I'm trying to impart on you guys as much as possible. Okay, right, now we're into the exercise section. So this is where I'll give you guys some exercises that you can then take this information and implement it yourself, so that you can start to get comfortable with how to do everything, and how you can start to get comfortable with when you try and buy a property, that you understand how to do this yourself, and it picks out any holes in the knowledge that you already have and the foundations of the information you've gathered today. Okay, so in terms of exercises, I've got 5 points for you on what you need to do. So the first one is find a property online for sale, any property. Okay, I mean literally any property. You just go find a house and you go, okay, this house is for sale. Okay, that's it, nice and simple. My suggestion is find one that needs refurbishment, just so we're clear. It makes it easier for the numbers to start to make sense and to start to work. Okay, the second thing that I want you to do, okay, so now you've found this property, make a list of all the informations, the postcode, the address, the type of house, 3-bed semi, and WA7 4BR, whatever it is. So just write down all the information, or copy and paste it into a spreadsheet, which is what I do. I love spreadsheets. Okay, then what I want you to do is I want you to go take a look at some sold comparable houses, okay, sold comparables. And the way you do this is you go into Rightmove, sold houses, I think is the term that they use. Okay, sold houses, and then type in the postcode, hit enter, see if there's anything within that postcode that is very similar that is sold in the last few years, okay, that is in good condition, and this will be a pretty good direct comparable. If there isn't anything, move it to a quarter mile. If there isn't anything, move it to a half mile. The further out you go, the less accurate this is, just so we're clear. Okay, and then just make a bit of an estimate where you say, okay, great, I reckon for this 3-bed semi-detached house in this area, I reckon you're probably going to get 135 for it, as an example. And you go, okay, cool. So I'm happy with that. Then you're going to call up 3 estate agents, completely unrelated estate agents to the sale. Just give them a call, be like, hey, look, I'm looking at buying this house online. And, you know, at the end, I'm probably going to look to sell it. You know, I may well bring it to you guys to get it sold. But for me to be able to do that, I want to run some basic checks to make sure that I'm selling it or buying the house for the right price. I don't suppose you could give me an eyeline or an idea as to what you think the house would resell for. Often you'll get, oh, we need to get the valuer to talk to you. We need to get, just say, look, all I want to do is just get a bit of an idea. I'm not going to hold you to it. Okay, you just want an idea. Otherwise, you're just going to get pushed from pillar to post and things will never happen. Now, you're probably going to speak to about 7 or 8 estate agents, but hopefully you finally get to 1 or 2, or, well, hopefully you get to 3 out of those that will then give you the information. Okay, and then you just want to get an idea from them as what they think it'll sell for in decent condition. Okay, not like A-class rating, but in good condition, freshly refurbished, looking nice and tidy. What do they think it'll sell for? Okay, make a note of those figures. Make a note of the estate agents, who they are. Okay, what the estate agency is, what the phone number is, just so you have that available. Now you've done, okay, now you've done your local comparable and your local knowledge. Okay, if you really want to, you can pop over to HomeTrack. It's £20 evaluation. It's not cheap, but it's worthwhile doing. Just get yourself comfortable with the process. Okay, our mentorship students currently get that for £2 each. We're going to be setting it up so they can get unlimited valuations for free as part of their program. It's a whole different thing that we're setting up in a minute. But it's a way in which you can then sense check what you're doing. Okay, now it's £20, but it's £20 well spent just to make sure that you're comfortable with how the whole thing works and go through it. The way to find it is search HomeTrack valuations. It's one of those. You'll see it will pop up with a postcode. You type in the postcode and then you pop in the address and some basic information. Any information you don't know, just leave it blank. Okay, if you don't know the year of build or anything, just leave it blank. It's okay. It still works. All right. Now you have a pretty solid idea, okay, as to what the property will be worth. okay, because you're going to compare all of these figures together, and all of those that bunch together. So let's just say you've got 5 different figures. If one of them is way out, you just disregard that. Okay, but if they're all pretty close, then just sort of make almost an average of them where you go, okay, it looks like we're somewhere around the 135 mark, as an example. Now you have built your puzzle for the valuation. You're going to do a very similar thing for the rental. Okay, so you're going to be looking at the rental comparables and confirming the rent, following exactly the same process. You already have the valuation report. You don't have to buy that again. It's got the rent in there. Okay, get your local comparables, look online, see what they are. Okay, and then get your local letting agent, speak to 3 different letting agents, ask what they think they'll rent it out for and how long they think it'll rent, or how long they think it'll take to rent it out. Okay, so that was number 3, is to get your rental comparable. Number 4, obviously, is to get your home track report, which I do urge you guys to do at least once. Okay, and then number 5, let me go over those again. So number 1 is to find the property for sale. Number 2 is to get your local comparables. Okay. Number 3 is to get your local rental comparables. Number 4 is to check in with the local estate agents and letting agents. Okay. And then number 5 is to get your home track valuation. Okay. And then build the picture. And then what I want you to do is just to see how comfortable or confident you are that those valuations are correct. And then secondly, absolutely fine, Katie. Awesome to have you on. Hopefully you've had some value and hopefully had some good time. I look forward to seeing you. We'll be back on at 8 p.m. again next Tuesday. I look forward to you joining us again. Yet to figure out what we're going to be covering, so it should be exciting. I'm sure we'll have a good time. But thank you very much for tuning in, being active. I appreciate it. Okay. So once you then have that information, you'll have a pretty good idea and understanding of what you think the property will be worth, what you think it'll rent for. And hey, look, if it's listed for a really good price, it might even be worth you booking a viewing for when this whole lockdown releases, getting yourself along there, taking a look and seeing if it's a good little deal. Okay. Right. Now, that basically brings us to the end of all of the content I wanted to cover. Hopefully you guys have enjoyed it, had a lot of value. Once we're done, obviously you're going to see the videos listed online. Please feel free to share it to your friends. If any of your friends, you think that they would enjoy this kind of thing or get some value or interest in property, please make sure you drop a message, get them on board, get them along to next week's video. It should be very cool. Make sure you hit the thumbs up, hit the hearts, hit the likes, whatever you need to. Let's just keep this whole thing rolling. But before I wrap up, I've got a couple of things. So firstly, have you guys got any questions? While you guys are running out some questions, I'm just going to do a little bit of a plug as to the other stuff that we're doing. So if you've got any questions, please do pop it into the chat box. Please give me a cue first if you've got a question, because I would hate to end the feed while you're busy typing out a question. And if you're catching this as a recording, please feel free to just ask any questions in the chat. We will respond to those questions. We will answer all those questions. Somebody is always monitoring it, whether it's myself, whether it's one of the team. Somebody is always busy checking the stuff on. So please feel free to ask any questions there is in the chat. Now, if there is no questions, or if there is, it doesn't matter, but obviously feel free to ask. We're running a 3-day training this weekend. Okay, so question, will comparables on Rightmove be any good after the coronavirus? So really, really good question, Leslie. My belief is yes. So in terms of, let me just rub this out and I'll give you a quick example as to what I mean. So, okay. So in terms of everything going on, you're going to know that there's a lot of, there's now going to be a lot of uncertainty in the marketplace for a little while, because a lot of people don't really know what to do. They don't really know how to sell. They don't know if the market's going to go well, if it's going to go up, if it's going to go down. So there's a lot of uncertainty. Okay, now there's a couple of things to consider. So as this whole Corona time came in, if you look at what was happening in the industry, the marketplace was actually starting to really move up quite significantly fast in the north as well as in the south, which is interesting. I mean, London had been going down for a while, but the north had steadily been increasing and growing in sort of trend, which is lovely. Now, of course, Corona's kicked in, and we're going to have this long lull because, of course, we've had a couple months where nothing's happened. The beauty is although we may see a little bit of a drop in prices, the government has just invested £450 billion into the economy. Okay, money that goes into the economy typically ends up moving its way through families, through lives, through businesses, through corporations, all that stuff, and ends up moving its way into investments, some sort of investment, savings accounts, property investments, stocks and shares, Bitcoin, whatever. So at some point over the next few months, the next 6 months, 8 months, when people start to normalize again, you're going to notice that money starts to hit the marketplace, which is lovely. So you're going to notice what is, it has to be what's called a snapback, and you're going to start to notice an uptrend. The other thing to consider, is the Bank of England have dropped their base rate from 0.75% to 0.25% to 0.1%. It is literally the best time to buy investment properties and rent them out, because your mortgage rates are going to be lower than you're going to find them for a very long time. The beauty is the bank can't just raise that interest rate or the Bank of England base rate up quickly, because it's just going to start bankrupting people who have become accustomed to that cost of living already. So that is a huge stimulus for the market, which in my personal belief, and obviously this is only my belief, means that the market will have a very strong uptrend. Now, how long this period is going to be, between market going down and market going up, I personally think 3 months before you start to see the shift. So 3 months between you start to see people getting uncomfortable and comfortable again. Now, the other thing to consider, not 3 months, the other thing to consider, now we actually covered this on our first property channel, number 1. The other thing to consider is the banks, they borrow money, They borrow money from the Bank of England at an interest rate, and then they have to lend that money out at a higher interest rate so that it doesn't cost them money. Because if they have 20 billion in the bank and they've got 10 billion loaned out, they're still paying interest on 20 billion. So they need to get the money out as fast as possible, and the easiest way for them to do that is to lend mortgages. That's where a lot of them lend their money. Now, the benefit of this is as soon as things start to balance out a little again, it's going to start to really hurt them, the fact that it's costing them so much money every month, and then they're going to want to be pushing the money back out. Now, the beauty is there's a lot of mortgage lenders out there at the minute, which means there's a lot of competition. So they're all going to be vying to try and get the best lending out there. And we'll come back to it. No worries, Nelly. Awesome to have you on, by the way. Thanks for joining the stream. Thank you very much. But yeah, so of course, there's a lot of competition between lenders, and that's why you start to get the better interest rates, the better setup fees. They pay for valuations. You start to get all of this stuff because they all need to get their money out as quick as possible. So this lull period technically can't be very long, because otherwise the banks will start to go pop as well. And I don't see the banks allowing that to happen. And as soon as they start to get comfortable putting money back in, then of course the market starts to skyrocket again with the lower interest rates and the higher amount of money in the economy. So in terms of your question, Leslie, which is a really good question, I think yes, because you're buying a house for a reduced price, and the idea is that you're going to be refinancing it in probably 6 to 12 months. So you'll be well out of the Corona lull, in my opinion. Obviously, I don't have a crystal ball, just so we're clear. But I don't see how this will last for more than 6 months. Hopefully that answers your question, Leslie. Really, really good question, by the way. Thank you very much. But yes, if you have any other questions, please feel free to pop it into the chat box in the interim. So good question. How many deals have you walked away from after due diligence? Or is it quite common to renegotiate? Okay, so really, really good question there, Kathy. Thank you very much. In terms of the number of deals I've walked away from, so I never typically just walk away from a deal unless there are structural issues or and major structural issues or things like Japanese knotweed that are not really negotiable. I remember I went and viewed a house that there was literally a tree growing from the downstairs inside the house, growing out of the window. It's fascinating. And I'm not talking little, I'm talking like this big. It was huge. This whole tree was growing out. Now, the house had obviously been uninhabited for a very long time, had a leak, water came through, etc. And I still never walked away from that house. I just offered an amount that made sense to me, because I knew the house would be worth about 70,000 when I'd done it up. And I knew it would probably cost me somewhere around 40,000 to be able to do that work. So I offered them 5,000 for the house. If I had the deal agreed, it would have been amazing. As it goes, it got sold in auction. I think it sold for about 25,000. Somebody lost some money there. I can tell you now, somebody lost some money there. But I never typically actually walk away from a house. I always renegotiate. Always, because you've already done all the hard work. You've already checked the house out. You've already done the due diligence. You've already confirmed the refurb costs. You've done all of the hard work. To walk away from it at that point is a waste of time, energy, and money. Okay, so at this point is where I renegotiate, and if it doesn't work out on renegotiation, that we're both happy, then at that point, unfortunately, it falls over. But yeah, really good question there, Kathy. Thank you very much, Alex. It won't be the same as the last two recessions, which were credit squeezes where banks wouldn't lend. Exactly right. So banks wouldn't lend. I mean, there's a whole conglomerate of reasons, but it's extremely unlikely that that's going to be the case again. I don't have a crystal ball. Things can still happen, but genuinely, I don't think that's a concern. Although you've got a lot of fear mongering, and the irony is the media talking about the Great Recession of 2020 and all of this stuff. They're going to drive the country into recession by making people scared and banks scared. It's a self-fulfilling prophecy. If they continue on that cycle, then they will create what they are saying they're creating. So providing the media doesn't get all buck wild and crazy, which I don't think they will, it should all work out okay. Okay, Adam, would you go to auction or would you use a better way of finding deals? So really good question there, Adam. So we use a significantly better way. The challenge with auctions is you have to pay for legal packs and all that stuff to be reviewed before you even get a deal agreed. I don't believe in spending money where necessary until you have a deal agreed in the bag. Okay, only at that point do I pay for my legals and stuff. Whereas in an auction, you don't know if you're going to get the deal, but you're paying for all these auction packs to be checked. So the way in which we find deals is we're a technology business. I'm an engineer. We've reverse engineered how to invest in property. So we've created a technology or a system where basically you just say, this is the kind of deal I'm looking for. This is the area I'm looking. And it will tell you what properties to view. It will cost out the refurbishments. It'll do all the heavy lifting for you. And then you go, okay, great. That's the one I want. And that's it. And, you pick the ones. And we call it the deal finder, ironically. And it's a technology we're developing at the minute. It's literally just been valued at between 7 and 8 million. It's only been around 18 months. That deal finder alone has helped our mentorship students buy 120 deals in the last 18 months, over £10 million worth of property in the last 18 months. And that's the stuff we talk about on our 3-day training. Now, it actually ties in really well. So we're running a 3-day training live this weekend, Friday, Saturday, and Sunday. If you want to attend, I would urge you try and get yourself along to the Friday. If you can't make the Friday, drop us a message. We'll drop you the recording. Watch the recording in the evening ahead of the Saturday. So I know some of you guys are key workers and working. Okay, but if you want to get yourself along to the 3-day training, please make sure you get yourself booked in. One of our team will drop in a link into both YouTube as well as into Facebook Live. Please just click on the link, get yourself registered. It's absolutely free. Okay, so the 3-day training we typically charge. I'll answer your question in just a second. I'll show you. So the 3-day training we typically charge £397 a person. So this 3-day training, because it's a live stream and I'm conscious of everybody on, and I want to make sure you get the most value you possibly can while you're sat at home, unable to do anything else except for learn and absorb information, is we're going to give it to you absolutely for free. So you can attend that. So all you got to do is just click on the link that's going to be added in shortly. Kathy, if you can do me a favor, just drop the links in, that would be awesome. So if you can click on that link, get yourself booked into the 3-day training. Likewise, please make sure you subscribe to our YouTube channel. We do loads of updates, loads of information. There's bundles of videos and stuff on there already. Get yourself onto our Facebook group. So we've got the Katana Property channel. Make sure you're registered there. Also, make sure you're checked in on our Katana Group Limited Facebook page. Get yourself booked in there. And then, we run this every single Tuesday at 8 p.m. Okay, 8 p.m. we run these live sessions. If you want to grab a chat, if you want to talk to me about, mastermind mentorship, the courses, the training, any of that stuff, just drop me a message. More than happy to have a chat. There's no pressure or anything. We only work with people who are ready to move their lives forward and people who are ready to build their portfolio. And if you're still umming and ahhing, it probably isn't a fit anyway. But I'd urge you, if you're curious, just get yourself along to one of the 3-day trainings. We go through all of this stuff, deep dive, in depth, how to invest in property, when to invest, where to invest. All the information that you possibly need, really, really deep. So the link should now be up. I believe the link's just been dropped into Facebook Live. I'm sure it's going to be into the YouTube in just a second. But look, guys, let me answer Ashu's question. So how would you double check refurb costs are true? Very simply, you use a trusted builder and you get them to give you a proper quote. We tend to find there's a couple of places where you tend to lose money in a deal. So the first one is that you overestimate the end value. Okay. The second one is you overestimate the rent. And the third one is you underestimate the refurbishment. So this is why we get the refurbishment quote done by a recommended and trusted builder. And that's the important thing, because if it's not a trusted builder, or if it's just a builder on Checker Trade, you don't know if they will actually come through, and you're kind of rolling the dice a little bit. So we rely very heavily on tried and tested build teams. We actually run some build teams for our mentorship students. We've got, I think, 4 build teams across the north of the UK that basically deals with all of the refurbishment. It might actually be more, deals with all of the refurbishments for all of the mentees. So anytime you've got a refurbishment, the team works through it pretty quickly. But yeah, so that's how we do it. I don't do fixed price contracts. If you do a fixed price contract is where you say to the builder, if you go over this price, we're going to fine you, or we don't go any more than this, or anything like that. All a builder does when you say fixed price contract is they just add 20 or 30% onto the refurb quote. They're not going to lose money. You're going to get stiffed. Okay. So I don't believe in fixed price contracts or anything like that. I literally, I rely on a quote, and I rely on a reliable builder that we've worked with before, and then repeat business with that build team. Okay. That's the easiest way to do it. And if they mess you around, you vote with your feet. It'll cost you a couple of grand for the mistake, but then they're out. Okay. I'm a big fan of voting with my feet. Okay. Hopefully that answers your question there, Ashu. Really, really good question, mate. Thank you very much. Right. I mean, we've hit our hour mark as well. My daughter is busy screaming in the background. I hope you can't hear her. She's 1 and she's obviously not asleep yet. So apologies if you can hear the baby scream in the background. But yes, so I mean, that sort of brings us to the end of the feed. Make sure you get the likes in, make sure you get the bells ringing, and share these videos as much as you can, because anybody that who'd be interested in property or investing, I'd love to be able to reach a wider audience and help more people get financially intelligent around property and more people financially free. I personally believe the way in which the system is operating now, it is not in people's best interests to continue to rely on the government and work for an income. As proven, lots of people have just had their lives pulled away out from under them because of a pandemic, where a lot of property investors and people who've got themselves set up never have to worry about this stuff. So please make sure you share this. Please make sure you like this. It has been an absolute pleasure to spend the time with you guys. I've really had a good time. I look forward to catching up with you all next week at 8 p.m. on Tuesday. And I look forward to catching many of you guys this weekend, Friday, Saturday, Sunday. It runs 10 a.m. to roughly 4 p.m. All 3 days. I look forward to seeing many of you guys there, absolutely for free on the 3-day training. Just get yourself checked in, get yourself booked in with the link. And I hope you guys all have an amazing night. Thank you very much. Bye.